Very warm greetings, everybody. Good morning. And my deep appreciations to the AERC, to Professor Admassu Tadesse, who's convened us here today for this very interesting conference. And of course, my warm salutations to my distinguished colleagues on this high panel, Deputy Governor Bijiwe, Minister Yansane, and Mr. Dirk Willem. Very much a pleasure to see you all, and I'm very happy to recognize the former governor of the Central Bank of Kenya, who's been well acknowledged this morning. Ladies and gentlemen, I'm the last speaker. I've been adjusting my perspective just to make sure we don't keep you too long and we don't repeat too much of what's been said. But nonetheless, it's a great pleasure to be here. Of course, like the previous speaker, I am a banker, so I will tend to speak more to the financial aspects, but I'll try to give some of the more contextual issues around the sector itself. I think it's very fitting, of course, that we meet here today in Kenya, venue of this conference, where agriculture has been a very vibrant economic sector for a long time. It's always been highlighted as one country in the continent that has had a very good experience in agriculture. And more importantly, given that innovation is the subject of this conference as well, it's a country that has perhaps been at the lead of innovation in the continent, as we've heard the previous speaker, in the area of the financial sector and the allied sector in telecommunications. The role and reality of agriculture, ladies and gentlemen, in our continent is very well known. It's not a new understanding for us. I think there's been a great deal of research and debate on the sector. It's the story, of course, of a sector with huge economic and social potential and even political relevance. Yet, ironically, it's the story of a big promise unfulfilled. It remains a paradox of scarcity amidst plenty. Let me just quickly remind you this morning, as you prepare to have a very rich session of engagement, that our continent has 60% of the world's arable land and vast bodies of fresh water with real potential to be a global breadbasket. It's a continent that also has very abundant, low-cost and unskilled labor, which is mostly idle and unproductive, but that can be deployed very successfully in the agricultural and rural sector. Yet, ours is a continent where the absolute number of undernourished people has increased over the last 30 years, and we spend about $35 billion of scarce foreign exchange on food imports every year. And as our currencies are facing devaluation pressures, the cost of importing food is rising even further, putting even greater pressure on public finances. Food imports are expected to rise to $110 billion by 2025. The constraints and features of our agriculture in Africa has been well documented. The heart of the problem is that our productivity is very low. Agriculture and agricultural productivity growth has been unable to provide the basis of a structural transformation in the economies of our continent, as we've heard from Dr. Willem. As such, the underdevelopment of the sector has not made it possible for us to substantially reduce poverty and hunger, unlike other developing regions that had similar problems to us several decades ago, but have made big strides. Cereal yields remain very low, and less than half of those currently being seen in Asia. As many of you will know well, there are many underlying issues that impact on our sector. The nature of land ownership and titles, access to inputs, access to credit and markets, lack of storage facilities, transportation, and rudimentary farming techniques that we still see widely used. But auspiciously, we do know what needs to be done, and we've known for decades. It has been done by many developing countries successfully, and the good news now is there's strong momentum in the continent, given the very strong push and focus on the sector over the past decade. We've seen some of the statistics from the Deputy Governor, some of the countries that have moved very quickly in this sector. What is very clear is that we do need a suitable macroeconomic framework in place that does not discourage agriculture, that removes undue biases, as has been seen over the decades. We need appropriate resourcing and incentives, as well as an enabling physical and institutional infrastructure framework. That includes supportive legislation and policies such as property rights. Central to all of this is reforms, as some of the speakers have highlighted, and of course innovation. This is why the subject of this conference is most apt. Innovation can open up and improve access to inputs, such as seeds and fertilizer, and this can be brought to bear quite creatively through the use of voucher systems, for instance, mobile technology, as we've seen from the previous presentation, and generally technology, improved technology for communication, payments, and information storage. We've seen Nigeria, for instance, successfully apply this approach, and they've achieved a great deal of progress in recent years. Mobile telephone technology applied to banking has also improved access to credit by rural farmers. We've heard a lot about the successes here in Kenya, and the wave is now expanding well beyond Kenya. ICT-based innovation can also improve farming techniques. In the past, many of us will remember that the approach has always been to apply agricultural extension services provided by government agencies or NGOs. This can now be delivered and supplemented remotely and perhaps more efficiently through mobile telephone services. Of course, we know literacy levels can be a challenge, but it could be overcome through usage of vernacular languages that have wider coverage levels. Again, ICT-based innovation can be brought to bear in the area of risk sharing through better access to insurance services, for instance. Cost-effective access to insurance services could be delivered remotely and at low cost in the same way money has become very mobile. Farmers could pay for insurance premiums for crops and livestock through their mobile phones and also receive claims through the same platform. This would also enable smart, targeted subsidies by the public sector to incentivize adoption and usage of services such as insurance. Supply chains, there's been reference to value chains. Supply chains is also very important. Supply chains can be better linked to our producers, including the smallholders. This is an important market access measure. We've seen remarkable progress in this regard here in Kenya, but also in Tanzania, in Ghana, Ethiopia, Tunisia, and Morocco, particularly in the global horticulture industry, which has shown what can be done with well-designed policies. With such experiences, we know that our continent can move towards the top of the global food chain in time. One effective mechanism for getting farmers to access markets is through the establishment of commodity exchanges. An example in this respect, some of you will know, is the Ethiopian Commodity Exchange, which has created an opportunity for farmers to sell their produce through the exchange at good global prices. The exchange has warehouses in rural areas closer to the farmers, where farmers can deposit their produce and be paid in vouchers, which is as good as cash. We've seen now commodity exchanges being rolled out throughout the region, and this is reason to be optimistic that our farmers will be able to sell their product for very good prices, acting as a positive incentive. Land ownership, ladies and gentlemen, is a vexing issue. It's always been an institutional weakness in our agricultural sector in many countries, because most of our land under cultivation is by communal farmers, and the land, of course, is communally owned with no land titles. Most land has been in the same families for several generations, and therefore title deeds are typically not available. Any banker will know that without property rights and title deeds, it's very difficult to leverage assets. This has been known for quite some time, but we don't think there's enough progress being made. We think there should be more of a push to empower farmers to be able to leverage their assets better. The benefit of having land titles, of course, is it also helps land markets to work better. They can be established. We do know that there's a risk of abuse and dispossession of rural people, but this can be mitigated through smart regulation. So this should not be a reason not to introduce land reform. Of course, once you have land reform and collateral is available, it opens up opportunities, for instance, investment in irrigation, which deals with the vexing issue of dependency on rain-fed agriculture. With institutional and infrastructural improvements, we can better address the perennial lack of access to finance. We've seen some of the slides earlier on. We've heard many leaders lamenting time and time again that despite agriculture accounting for a good third of African GDP, the sector receives less than 3% of banking finance. It's a huge gap. In this regard, perhaps by just talking to the issues, I should highlight that we're very proud at PTA Bank to have put a high level of priority on agriculture and agribusiness. It is the second largest segment of our portfolio, only second to energy, and it accounts for close to 25% of our total portfolio. So we've understood the imperative, and I should point out to you that we've been very active in the sector, not at the expense of the health of the bank. Central bankers, of course, are also very keen to ensure that banks don't become bleeding heart financiers to the detriment of the stability of the financial system. We've managed to be very active in the sector, and in fact, we've been very rewarded. We've had very good profitability over the years. The sector, in terms of quality of assets, has been very good for us. And in fact, we've been rated to be one of the better performing specialized financial institutions that works in sectors such as agriculture and in countries that happen to be often seen as fragile. We're very active in countries like Malawi. We're active in countries like Zimbabwe. We're active in countries like Sudan. These are countries that have special challenges. And these are countries where specialized institutions such as ourselves have to step in to deal with not just market failure, but also institutional failure. Food security at the regional level is as important as food security at the country level. We know what happens when countries fail, causes massive refugee problems, causes all sorts of other distress. So we are very pleased as PTA Bank to be following this sector closely and to try to rise up to the imperative. Towards closing, I should perhaps highlight some future dynamics. Let me remind you all that our continent will have 1.5 billion people by 2030 and 2 billion by 2050. Already we're importing so much food, we cannot feed ourselves. It's a serious challenge that needs to be addressed. And of course, the sector that finance agriculture. Agriculture cannot be financed on its own. Public sector resources are important, but so are financial institutions. Ladies and gentlemen, I'll just wrap up by quoting the words of one of the Nobel laureates in economics, Gunnar Myrdal, who pointed out decades ago that it is in the agricultural sector that the battle for long-term economic development will be won or lost. I thank you for your attention.